Have you ever opened your trading app and saw numbers moving everywhere, but you don't have idea of what pips, lot size spread, bid and askers actually means? So don't worry, in this video I'm going to break down those phrases basic in simplest possible way, so that after this video you'll be able to understand how traders make money, how profits are calculated, why your trade starts in minus, and how lot size control your risk. So, and if you are serious about learning Forex, this video is one of the most important foundation you need when it comes to trading. So now, what is pips? Pips actually stand for percentage in points. Percentage in points. So, and is the smallest movement in the Forex market. So that is the smallest movement in the Forex market. And think of it like this. Let's say you want to measure a distance, you will use meter. If you want to measure a weight, you will use a kilogram. But in Forex markets, if you want to measure price movements, you will use pips. So, and pips is the fourth decimal points in a price code. You start from the fourth decimal point in a price code. So let's say, for example, but on JPYP, it starts from the second after the decimal points. It starts from second number. So now let's say, for example, we have Euro USD, EUR USD, and the price of USD is 1 point. Price of USD is 1.1000. You know that after this decimal points, we have 1, 2, 3, 4. We have four number after the decimal point. But on your trading view or on your MC5, you might have 5. But the counting is going to start from this fourth one. This fifth one doesn't really count. It's called pipite. So you don't really have to consider that, because let's say you want to check time now. You know, if I ask you time, you can just tell me that, okay, the time is maybe 8:45 p.m. or 8:30 p.m. You will not tell me the seconds of that of time at that particular time. So that is how this how the fifth number is actually, that is how it was from this price number now. So let me just remove it. Now let's focus on what's really matter. So now let's say price now move from, it's now moved from 1.1000 to 1.1001. So in that case, that means we have 1 pips movement. And if it moved from 1.100, okay, 1.1010 to 1.020. So in that case, that means price move, that is 20 pips. If you do the calculation, you can just do the plus and minus calculation. And let's say you want to add maybe you want to add 50 pips into this number. Now, the simplest way you can do it, if you want to use a calculator, is this. You can just put, this is going to be 0. Okay, 0.0050. No, that is 50. If it is, let's say if it's 100, it's going to start from this third one here. And if it is 1,000, it's going to affect this third number here. If it is 10,000, it's going to affect this number here. So, but this is 50. So now we want to, let's say now want to do the calculation. You cannot add 50 pips to this 1.1020. So in that case, it's going to give you 1.1070, because if you had 50 to 20, that's going to be 70. So it's just a simple math. So in that case, it's going to give you, that's going to be 70. So for you to calculate how far price move from one point to another, you have to just, that is, you have to calculate the pips. number. So that is how it was. And for JPYPS, you can have it like this. Maybe you can have it like this, 1 point, okay, have 3 number first before, maybe 101. But the pips counting is going to start from this second number. So it's going to start from this second number here. So that is how it was. And the calculation is the same way you calculate. It's just a normal simple plus and minus. So, and that is that. And why you might be wondering that why pips is so important. So pips is important because if you want to calculate your profit and loss, you calculate it in pips. So let's say price moving in your direction, maybe 50 pips in your direction, in your favor. That means you will make profits. And if it go against you in 50%, in 50 pips, you will lose money. So, but how much you lose on the trade on that particular movement is going to determine based on the amount or the size of the position you open. And that is what is now going to take us to lot size. So lot size, I said that the pips is the movements of how price move in the forex market. Also know how price move in the forex market, that is going to be pips movement. Okay, let me quickly use this as example before we proceed. Let's use the let's use live charts, for example, before I proceed. So this is GBP USD, and if you check this quote number here, you see that we have a lot of number. So if price, the current market price now is 1.3543. So if price now move from that region, let's say it's moved from this line that I put here. If it move from this number here to this other line that I put here, so let's use ruler so that we won't have to. Let's use ruler to just check it, how many pips. So can you see from this point to this point here is 182 pips. So that is 182 pips. So for you to know how far price move from one region to another, you just have to check how many pips price move. So, and that is how you can determine that, okay, this is how far price move from this region to another. So, and I said that if price move in your direction in 50 pips, you will make money, and if price going against in 50 pips, you will lose money. But how the amount you're going to lose is now going to depend on the size of your trade. So, and that is what now take us to lot size. So, lot size. So, what is lot size? So, lot size is actually the size of the trade you open. So that is just the simple and effective way. So lot size is going to determine the size of the trade you open at a particular time. Let's say you want to buy something now, you can buy something of maybe $1, $2, $3. So that is just how lot size actually is. So lot size simply means the size of the trade you open, or you can also call it the volume you are entering in the forex markets. So, and we have 3 type of lot size. We have 3 type of lot size. So we have 3 type of lot size. So the first one is standard lot size, which is, so one standard lot size is actually 100 units of currency. It's carry weight of 100 units of a currency pair. And the second one that we have is mini lot size. Mini lot size. So, and for the mini lot size, it starts from 0.10 lot size, or you can say 0.1 to 0.99. Anything that make it cross 9 with 0.99 is going to turn to one standard. So, and for this 0.10, that means you are open a trade of 10,000 units of currency in the market. So that's 0.10 carry, that is 10,000 units. And thirdly, we have micro lots. We have micro lot size. And for the micro lot size, that is 0.01. That's the smallest lot size you can use in the market. And that carry 1,000 units of pair. So that is 1,000 units of pair. So that is the smallest lot size you can use when it comes to trading. So, and the important part of it is that you see all this lot size, you don't just use randomly. So the lot size you use is going to determine how much you are going to make on a particular trade, or the amount you are risking on a particular trade. But let's say you don't understand it and you're just using a random lot size. So that means you're just gambling your money in the market, and which is not really nice enough. So now let's now compare the movements of price. If price doesn't move, you cannot make money. And if price is moving, the size of the position you open will determine how much you are going to make on the movements that price is making. So now let's now check for the one standard lots. So that is 100,000 units of pair times 0.0001. So, and that's going to give us $10. But you don't really have to bother about this calculation. But let's just continue. So for the micro lot size, which is going to be 0.10, that is 10,000 units of pair. 10,000 units of pair times 0.001. So that's going to be $1 or 1 pip movement. But for the micro lot, which is 0.01, and that's the smallest lot size. So that's going to be, so let's just that's going to be 1,000 units times 0.0001, which is 1 pips movement, and that's going to be 10 cents. That's going to be 0.1 cents or 0.10 anyone 0.1 cents. So, and as you can see now, you see that both, let's say we have 3 traders now, they all maybe price move in their direction, just one pip movement. The first trader that's used one standard lot is going to be making $10 on that same trade, and the second trader that's used mini lot size is going to be making $1 on the same movement too. And the third trader that's used micro lots, that's one is going to be making just 10 cents on that same trade. So now let's now say price now move in their direction, maybe 10 pips for the standard lot size. Let's just say times 10 pips. $0.001. So that's going to be $100. $100. And for the second trader that's used 0.1, which is the mini lot size, So that one is going to be making times. Okay, let me just write 10 pips so that we won't get confused. 10 pips. So that one is going to be making $10. And for the touch trader that's used micro lot size, which is 0.01, and that is the smallest lot size you can use, 10 pips. So, and that's one is going to be making $1. So see that the size of the position you open will now determine how much you are going to be making on the movement of the price from one region to another. But don't just focus on this profit side only. It's going to be same way if price move against them in that same, maybe you use one standard lot size now and price move against you 10 pips. That means you're going to be losing $100. And if you use 0.01 and price move against you in 10 pips, you're going to be losing $10. And if you use the micro lot, which is 0.01, and price move against you in 10 pips, that's going to be you'll be losing just $1. So it's half upside and it also have downside. So before you enter any trade, the first thing you want to ask yourself is that how much are you risking on this particular trade? So that is what is going to determine the lot size you're going to be using based on your stop loss. So I will still explain how you can calculate that as we proceed. So that's just the easy part of it. I'm going to make another video that I will explain how you can know the actual, because most of these pairs, we have different pairs that their actual value is it's not actually the same thing. For one standard, for the micro lots and mini lots, the pip value is actually not same thing. So for some pairs, if price move in your direction in 1 pips and you use one standard lot, we say the actual value is $10, but some pairs can give you $7, some pairs can give you, it can be $8. So but you don't really have to worry about the pip value. I'm going to show you a calculator you can use to know the actual pip value for different currency pair, and also how you can also calculate the exact amount you want to risk on the trade and know the right lot size to use so that you not gamble your money or just use random lot size when you are trading. So, and that's about pips and lot size. So now what is now bid and ask price? When you open your MT5, it's most likely you will see a two line. One is going to be green and one is going to be red. So you have two lines like this. So this one that we have, this top here, is going to be the bid price. Bid price. Why this one we have below here is going to be the ask price. Ask price. So for this bid price, you can have something like this. Let's say the price number that we have as this bid price is 1.001 0. Let's just use that as example. And for this second number, you can have 1.00012. So you know that the difference between these two numbers now is 2 pips. That is 2 pips. So if you open a buy position, they will open it for you as this bid price. And if you open a sell position, they will open it for you as this ask price. So that means the bid price is the price a trader is willing to buy. A bid price is a price that a trader is willing to buy, while the ask price is the price that a trader is willing to sell. So let's say, for example, now you go to bank, you want to buy, maybe you want to you need a hard currency of dollar. You want to use naira to buy dollar. So they can charge you that, okay, you want to buy from them, right? They can sell it for you at, so they can sell it for you, you are buying, they can sell it for you at 1,550. Okay, let's change this number. Let's change this number here. Let's say 1,550. 550. Why this one here is 1,500. So if you want to buy, they can buy, you can buy at this price. You can so you can buy from them as this 1,550, then they will give you $1. But if you go back, that's okay, you want to sell for them again and they will give you naira, they can tell you that, okay, the amount they will buy from you now that you are not a seller, so they want to buy it from you. The amount they are going to be buy it from you now is going to be 1,500. That's what now that you want to sell it back for them. So they cannot buy it from you as this amount. So that is the ask price. Is a price trader is willing to sell, while the bid price is the price the trader is willing to buy. So now you now see the difference between this ask and bid price. You know that that's going to be 15 naira in this case. So that difference is now what we know as spread. That is spread. So, and the spread is the commission you are being charged on every trade you open by your broker, on every trade you open. So that's the reason why if you enter a trade, you will see that it's going to be in a minus first before it's going to be in a going profit. Because if you buy, it's going to open here, and this ask price, we have to cross your position to the upside before it can be in profit. And vice versa, if you sell, it's going to open here, and this line here, bid price, we have to cross your sell position before you can be in profit. So the difference between the ask and bid price, which is the price difference, is the commission your trader charge you on every trade you open. And for some zero spread accounts, they will charge you commission instead of spread. If you have zero spread account, they will charge you commission straight instead of charging you spread. So that's for the pips. So the pips is the movement of price, while lot size is the size of the trade you want to open, and that's going to determine the amounts you're going to be making based on the movement as price move from one region to another. So why the ask and bid price is the amounts a trader is willing to buy or willing to sell. So the spread is the commission, is the difference between the ask and bid price, and is the commission your broker charge you on every trade you open.